Also, the speed with which silver is moving somewhat surprised me, even though I predicted a few weeks ago that it would rocket towards 50. I believe that this enormous bull market for gold and silver will reveal that. Our monetary and currency system's deceit will be exposed. The market isn't even in a bullish phase. To some extent, I suppose you could call it a bull market for precious metals. However, the fiat currency is more likely to have a collapse or a huge bear market. The recent upswing in silver's price is about more than that. The current monetary system is clearly losing credibility, as indicated by this indication. Silver has abruptly surged into the much-anticipated $50 milestone after years of lingering below important resistance levels. Bruno Innecco, who had foretold this surge, is astounded by how quickly it has occurred. He sees more than just hypothetical enthusiasm here. It is a reflection of the increasing strain on the world's fiat currency systems. Central banks still choose gold as an institutional hedge. Silver, however, has traditionally been considered people's money, and its recent ascent has been seen as a grassroots rebellion against established methods of monetary regulation. It would be foolish to write off this movement as temporary market fluctuations, now that silver has closed above $46 and is gaining steam. An increase in metal prices is not driving the rally. The issue is the diminishing trustworthiness of fiat currencies. The government has repressed silver for decades in an effort to keep it from being an indication of monetary weakness. However, that suppression isn't working anymore because physical demand is outpacing paper-based markets. There is a key psychological threshold when we approach $50. Once broken, silver's price floor won't be the first to collapse. Faith in fiat currency will be the basis. The reaction of the gold to silver ratio provides additional evidence of this change. The current trend in the charts shows that silver is outperforming gold, which is consistent with a long-established pattern in bull markets for precious metals. Even if gold will keep doing well, investors' mindsets are changing since silver is accelerating. People are looking for ways to protect themselves against the depreciation of their currency, not merely a place to stay secure. Not only does that transition herald opportunity, but it also heralds transformation. Today, though, we will focus on silver, with a little of gold as well. As I mentioned a few weeks ago, I believe silver was about to surge towards $50. Also, you're accurate that it took a long time to break $30. It took us until over a year ago to get out of the $30 range, which we tested in 2020 to 2021. However, the pace is rapidly quickening. My interpretation is that this poses a danger to the existing fiat currency, monetary system, and banking system. Absolutely, silver is crucial. Additionally, we will examine a number of matters connected to that. That has nothing to do with silver, does it? Since nobody is interested in silver anymore, I suppose silver could theoretically destroy them. Nobody understands the significance of silver or why it has been kept under wraps for over half a century, beginning in 1980. For starters, silver is the de facto currency of the people. Of course, gold does very well and performs admirably. Yet, it's primarily their funds. That doesn't imply you should be without gold, though. And I'll show you why silver is so valuable as a medium of exchange. We ended yesterday just above $46, the spot price. So yes, silver is now at $46. Even though I predicted a few weeks ago that silver would rocket towards $50, the rate at which it is moving has astonished me. Regardless, these coins are worth around 8 counterfeit dollars right now, aren't they? Because in reality, we do not possess any dollars. It is believed that the dollar can facilitate the acquisition of silver and gold. The Federal Reserve has issued counterfeit money. 8, I guess. For this, you can now acquire 8 of the counterfeit dollars. The result is $40 when you multiply 8 by 5. In the United States, I am not familiar with the exact minimum wage, but it is likely far lower than $40. In my opinion, it is what the current enormous bull market for gold and silver will reveal. Our monetary and currency system's deceit will be exposed. The market isn't even in a bullish phase. I suppose you could call it a bull market for gold and silver. But the fiat currencies are more accurately described as being in a state of collapse or gigantic bear market. Plus, we'll be examining some charts shortly. Naturally, the 50 level is crucial, returning to the gold and silver. Therefore, I will now display some charts. Also, this chart seems to be indicating that silver is about to make a major move. Here, we can see the silver price relative to the gold price. It's the inverse of the gold-silver ratio. We need to break out above roughly 1.2%, 1.3%, as I mentioned before, or it was Michael Oliver who said it on the channel about a month or so ago. Afterwards, I've been keeping tabs on it and have mentioned it to you all for the previous several weeks. What we have here is a weekly chart. This is where we're truly breaking out, as you can see for yourself now. When I last mentioned silver a few weeks ago, I believe we hadn't broken this trend line, after which it simply blew straight through it. In light of that, what does this matter? For starters, there have been bull markets in gold and silver since the 1970s, when the dollar first became devalued and unbacked by anything. The 1970s bull market peaked in 1980, and the early 2000s bull market began about 2001 and peaked around 2011. Although silver initially trailed behind gold, it eventually took the lead and surpassed gold by a significant margin as the bull market came to a close. And for the past 4 or 5 years, we have been patiently waiting for this. In addition, every time it appears like silver will begin to outperform, it fails to do so. Not until, well, perhaps a year and a half ago, has it maintained gold prices somewhat in check. To verify this, though, silver was required. Naturally, I predict that this will cause silver prices to skyrocket, which will have a devastating effect on the silver mining industry. That doesn't mean gold won't be successful. It just means silver will be much more so. So, am I to sell my gold and invest in silver? Really, all I do is attempt to bolster both. Regarding the miners, I'd say, sure, have a few. A tremendous taking might happen, that much is true. Despite the increasing difficulty, your broker may still be able to provide you with your share certificates. I would advise you to simply be cognizant of the danger and take personal responsibility for managing it. In my opinion, the miners, the amount of money I invested was a negligible fraction of my actual gold and silver holdings. At this point, the percentage is growing substantially. Yes, I will eventually earn from those miners, but I believe it's still in its early stages. Basically, this suggests that silver will outperform gold, which is a huge deal. According to this chart, this is the case. Remember when I mentioned the teacup and handle formation? Well, this is it. At the quarter's close, we're breaking out. Here we have a quarterly chart. Week 1 comes to a close on Tuesday, as expected. It appears that silver will close at an all-time high for a quarterly period. Because of our close calls with the 50 level in 1980 and 2011, I believe it to be quite significant. Thus, it serves as the boundary. However, keep an eye on silver if it manages to remain above this line till Tuesday. I believe it has a decent chance of doing so. Also, it will prove what I already suspected. Our monetary system is inherently flawed. According to Mario Innecco, the demise of fiat money is now more than just a theoretical concern. Its acceleration is being observed in real time. While he may have been ahead of his time 20 years ago, he realizes today that the system is about to collapse under the weight of the exponential growth of debt and financial fraud. Economists and policymakers maintained for a long time that printing money and increasing the national debt would have no end, while opponents of fiat were ridiculed as alarmists. His analysis of the US dollar index serves to bolster his argument. A rising dollar should lower gold prices, according to many. But that is not the case, as history demonstrates. Although the dollar experienced brief recoveries after crises such as the 2008 Bear Stearns collapse, gold nevertheless climbed beyond $1,000. Both have been on the rise ever since, demonstrating that the strength of the dollar is not the only factor influencing gold's performance. When one considers factors other than monetary value, true insight emerges. Whether measured in the historically steady Swiss franc, euros, pounds, or yen, the price of gold is at an all-time high. This proves that the problem is with fiat money as a whole, not with any one currency in particular. Returning to the interview, let us proceed. I knew fiat would die out at some point. I was probably more than 20 years ahead of schedule, but I still anticipated it would be a while. However, many individuals naturally maintained that adding to the debt would have no effect. However, in Rafi Faber's words, I believe we have reached the endgame at this moment. This is Rafi Faber's last act. Remember what I've mentioned before. You should never let go of your gold and silver. You can give futures and exchange-traded funds, ETFs, a go, but it's risky business. I believe that if you can hang on to your miners, physically or otherwise, you will accomplish a great deal. This is not the place for your gluttony. In my opinion, holding physical can lead to many benefits. The price control that has been in place since 1980 is depicted here in this teacup chart. The European and American bullion banks are now indeed seeing their control eroded. So, what do we have here? It is the dollar index, I see. It's not exactly flying high above the trend line. The dollar might get a boost, that's true. An increase in the dollar could be possible in the event of a geopolitical crisis in Europe, according to some. Considering that gold hit an all-time low in 2008, I don't see how that could be bad for the precious metal. I also recall the exact month that JP Morgan had to acquire Bear Stearns. It was March 2008. Additionally, the price of gold hit a new record high of $1,032. Also, $7,069 was the lowest point for the dollar index. Thus, the dollar index has been rising continuously since that point. To the contrary, the price of gold has risen from $1,000 to nearly $4,000. Thus, the dollar and gold are not always negatively connected. That is my take on the dollar index then. The dollar index is just a measure of the dollar's value relative to other fiat currencies, which are also losing value relative to gold. So I wouldn't place too much stock in it. That too will be examined shortly. The Dow-gold ratio is currently in my possession. What this tells me is that the stock market is also in jeopardy. The stock market has been on a tear since hitting rock bottom in April. In contrast to gold, the Dow rallied. However, it turned into a bearish rising wedge. In addition, we have fallen below the trend line. Also, the Dow is rapidly falling in relation to gold at the moment. Over the course of the next several years, I anticipate this ratio naturally reaching 1-to-1. All right, let's go on. All it is, really, is a graph showing the price of gold from the early 1970s onward. This further proves that this breakout is still in its early phases. It was at this time last year when I was gazing at 2,700. Oh, we really crushed it. It was subsequently retested.